Hey everybody, let's talk about interest rates for a few minutes. First and foremost, they're pretty high. Right now, the average interest rate is right around 7%. You can get a little bit less if you have great credit and you put a lot of money down. You're going to pay a little bit more, especially if you're an investor or it's not a completely safe prospect for the bank. But let's talk about that 7% interest rate. So on the average home, maybe $300,000 home, you might be paying somewhere in the neighborhood of about $300 more per month than what you would have been paying had you bought the house 2 years ago. Let's just forget for a second that you're probably going to be paying about 5 to 10% more for the house now than you would have paid 2 years ago. But we can't go back in the past and undo that. So let's just focus on the present. So $300 a month, perhaps. It obviously depends on the house. So if it's $300 a month, you're probably going to be paying that $300 a month for, say, the next 2 years. So $300 times 24, $7,200. So over the course of the next 2 years, you're probably going to be paying about $7,200, give or take, more for your house than you would have had the interest rates been lower. So let's see what the cost of waiting is. So if you wait 2 years-ish, nobody knows for sure, for the rates to go down, the rates, let's say that the rates drop to like 5%, 4%, 4.5%, somewhere in that range. That's probably what they're going to be going down to. I don't think we're going to see anything to the threes or anything like that anymore. But when the rates go back down, you're now going to save that $300 a month on your house, okay? But you would have missed out on, let's say 10%, 5%, 10% equity, whatever the case may be. So you're going to miss out, let's say it's 10%, you're going to miss out on perhaps $25,000 to $30,000 worth of equity on your house. Again, every situation is different, every house, every location. So let's just say it's $25,000. You got $7,200 versus $25,000. So you're going to make back more than 3 times your money in equity. And you'll already own that house. You can refinance, and then your rate is going to drop and your payment's going to drop. So now you have the house, you've had it for a couple of years, you've got the equity, and now you have the lower payment. So this is how you look long term for solutions instead of just standing on the sidelines and waiting and waiting and waiting. If you want more details about this or how it exactly pertains to your situation or more exact numbers, I'm happy to go over them with you. Just give me a call at 443-226-0082, or you can email us at randy@marylandhomes.pro, and myself or any of the team will be happy to go over everything with you and come up with a plan that's suited for you. Thanks.